Hello viewers, welcome to my YouTube channel once again. Alright, so in this video, I'm going to be talking about top-down analysis. What is top-down analysis? How I do my top-down analysis. So over the week, I decided to ask my free Telegram channel what content they would like me to make a video on. So I had some few answers and I decided to choose this particular topic, which is how to do your top-down analysis. So this is how I make my top-down analysis. All right. So first of all, what is top-down analysis? Top-down analysis is just a way of analyzing the market from the higher time frame to the lower time frame. Okay. So this is when you go into the market, you analyze the market from the high time frame point of view to your lower time frame point of view. Now, the reason why I say to your lower time frame point of view is maybe I'm interested in taking trades in the 15-minute time frame. You are interested in taking trades on the 2 hour time frame. So we all have different time frames. We look for what our entries and then what our trades. Okay, so that's why I said to your lower time frame point of view. All right. So what why do we need top-down analysis? Why do we need top-down analysis? Now, the reason why we need top-down analysis is one, to give a clear sense of the market. Okay, to give us a clear sense of the market. Now, without top-down analysis, you can't really tell where the market is moving. You get it? Now, you can't just go into the market and be like, oh, the market is looking bearish, so I'm going to short. I'm going to short. All my trades are going to be short. No, when you do that, that means you are just gambling. You are just doing something you don't know about. All right. So the reason why we need top-down analysis is what give us a clear sense of the market, the direction of the market, of the structure of the market. Okay. Now, the second reason why we need top-down analysis is to know where the market is probably getting to. Yeah, you need to analyze the market ahead to know where the market will be heading to. Okay, in the next month, in the next week, in the next day, depending on the type of trader you are. So that's basically one reason why we do top-down analysis to analyze the market and to know where the market is probably going to get to in the next week, in the next day, or in the next hour. All right. Now, the next reason why we need top-down analysis is to make is to have some heads up in the market. Yeah. The reason why I say heads up is when you go into the market, when you do your top down analysis, you get to know that there are certain levels that are going to be very vital. Okay. So what will you be doing? You'll be waiting for the market. If the market gets to those key level, you know that you need to do something. So it gives you some heads up in the market. You know that, oh, from the look at things, this is where the market is going to go to. From the look at things, this is where you think the market is going to is going to go to. Now, those are some of the few reasons why we need to do top-down analysis. Top-down analysis. Okay. So as I said, I'm going to show the way I do my top-down analysis. So this is a trade that actually, there's a top-down analysis I did on USDJPY. Okay. So I did this analysis on USDJPY and I actually posted this in my free Telegram channel, and I think it gave us about how many pips? Yeah, 660 something pips. So this was my initial look on the chart. Okay, so this was my initial analysis I made on on this pair. So I was expecting the market to come here or either this place before I get a move to this side. Okay, so this was what I was expecting the market to give me. All right, so now I'm going to be explaining how I actually analyze the market to get this particular amount of pips on this particular trade. Now, if you're in my Telegram channel, you know this is not the only analysis I did. Yeah, I also had some few analysis, and then this is the one I'm going to do a video on to explain how I do my top-down analysis. Now, to actually do your top-down analysis, you need something called confluences. What are your confluences? What do you look at in the market to actually analyze the market? What are the things that you look for? Now, some of the things I look for, one is what supply and demand levels. I look for imbalance in the market. I look for liquidity, what zones in the market. So these are the top three things I look for when I want to what do my top down analysis. All right. So I'm basically going to show you guys how I do the top down analysis. Now with this particular pair, I added something different to it. So hope you guys watch, get into the latter part, or where I get to show how I got this particular entry. Then you get to know what I used to get the entry. All right. So let me just so from the image that we had, we were on our 4H time frame, and then it was actually at this place. So I'm going to play back to this particular place, and we see how the market plays to our side. Okay, so something here. Yeah, I think it was here. All right. So this is what we are going to be having. Okay, this is what we are going to be having, and then I'm going to clear charts. Let me just clear the drawings and everything, and then let's see. So basically, I start from the weekly time frame. Okay, yeah, I start from the weekly time frame. Now, when you go to the weekly time frame, what do we have? What do we have? Now we can see that from this side going up here, we can see USD JPY is very, very what? It's very, very bullish. You can see USD JPY is very, very bullish. So what do we have? So let me just take from here to here. We had our higher high, higher low, higher high, our higher low, our new higher high. Then we had what? Our low right here. So we had this particular what? Higher low broken to give us this particular what? Zone right here. Okay. So already I know my what? I know what market structure I mean, I know I'm in a bullish what weekly structure. So when you go to the weekly time frame, I know I'm very bullish. But when I got to this side, I got what? Some bearishness here. Okay. So if you know something about market structure, I have a video on market structure. I hope you guys watch it. I think I'll leave the link in the description below so that you can refer and watch the video on market structure. Now, you know that when we are bullish, okay, one thing that makes a bullish market is when we don't violate what our lower lows, our higher lows. Sorry. So when we don't violate our higher lows, so immediately we violate our higher lows, then we have to be looking for the market to either move to the upside here to look for a particular supply, then what give us a change in what in the market direction. All right. So that's the same kind of thing that we have here. So you can see that we had a market let me just we had a market coming here to break what this particular low right here. So we had a market coming down to break this particular low. So we had a break of structure right there to the downside. Now let me clean this drawing here. Now when the market came to that particular side, what did the market do? What did the market do? Let me just zoom. So now we had the market trading into this particular what demand. We had the market trading into this particular demand. So already I know that the market has traded into a demand right here. Okay, I know the market has traded into a demand right here. So we had a break of structure. Someone will say a break of structure to the upside here, a break of structure to the downside, which is giving us a chalk. All right. So basically, when you know the structure of a chalk, then you know what you're going to be expecting. You're expecting the market to go up. Then we look for a particular supply zone or the market to fill up some imbalance or liquidity, take out liquidity. Then we get ourselves. So what was I looking at? What was I looking at? So I decided to go to the daily time frame. So already I got my demand right here. All right. So I got my demand zone right here. And then I decided to go to the to the daily time frame. Now on the daily time frame, um I know that I noticed on the daily time frame we had some daily bearishness right here. Okay, so the market was very bearish until it traded into this particular demand zone. So what am I expecting? I'm expecting market to actually be bullish from here so that we can fill up some imbalances and take out some liquidities. Okay, so that was what I was expecting. So now when you zoom in right here, okay, so from daily, when you zoom in right here, you can see that the market um, was kind of giving us some nasty moves right here. Yeah, this particular structure was not really good. We had a long wake going up. I know most of a lot of people were liquidated by this wake. Markets consolidating here for some time before it came down here. Now you may think the market was just moving down here, but then when you look closely, as I said, some of my confluences, you can see that the market actually came to what fill up this particular fair value gap we had right here. Okay, so there was this fair value gap right here in which the market came to what fill, and then the market traded into this particular block right here. All right, so you can see that that's what the market was decided to do on the daily time frame. It came to fill this imbalance and then traded into this block. All right, so the market traded into this block. Now, when I saw that, what was I expecting? What was I expecting? So I was expecting the market to go up. Okay. Now, this week right here, let me go back. Let me just zoom. This week right here, I consider this weeks normally as inducements, liquidity, or something like that. Yeah. So I was actually considering this as what? Inducements. I was actually considering this particular week high here also as what? Inducements. That's liquidity for me. I'm expecting the market to come here, what? Clear this one out or this one out and then trade somewhere above here. But then since I was just expecting market movement in within some few weeks, okay, so I decided to go to the what? To the 4H time frame. All right. So I decided to go to the 4H time frame. And just yeah, I normally use the Asian highs and lows to trade a lot. If you know what I'm saying, then yeah. So when I went to the 4 8 time, so already I've marked out my zones right here. I know what this zone is. I know what we have here. And then I know what I'm dealing with right here. All right. So let me just decrease this. Good. So I know what I'm dealing with right here. Same thing here. Okay, so once I knew what I was dealing with, okay, so what am I looking for? What am I looking for? All right, so I was basically looking for what entries. Okay, I was looking for models that are going to show me that yeah, the market is actually what changing direction or giving us some break of structure, some chalk, some wipe off, distribution accumulation. So right now, as I'm looking for buys, I'm expecting some wipe off accumulations right here. Now, if you go to the lower time frame, you zoom this place. I mean this whole place. Yeah, let me change the color. I mean, that whole place, you can see that will be some Wyckoff accumulation happening there. Okay. Yeah. So we had the markets coming to tap into some demand, whatever. Then what? The market gave us a break of structure. Okay. So right here, we had a break of structure right here. So already I had a break of structure right there. And then looking at this place, okay. So one thing I had here, we had relative equal highs, but then I just decided to what do something like this, which is just liquidity, whatever. Okay, so just liquidity. I'm expecting the market to what to sweep out this liquidity. So that's what I'm expecting. So if there is a target I'm having this place. So I was having this place marked out. That would be my target. That would be where I'll be expecting what the market to get to. If the market is not going to get to anywhere, I think I'll be expecting the market to get to this side. All right. So this is where I'll be expecting the market to get to. So what was I expecting it? So I was expecting the market to just take out this particular wicks, this place, and then what come to what fill up all this what fair value gap, this imbalance right here. Okay, so that was what I was actually what expecting the market to do. And so what was I expecting it? Now with the way I trade, I know that whenever we have a break of structure, so something like this, let me just use a different tool. So whenever we have a break of structure, okay, right like this, something like this, I'm just trying to explain something here. So whenever we have a break of structure to the side, what will I be expecting? I'll be expecting a pullback. So whenever I get a break of structure, I'll be expecting somewhat kind of pullback into the market before we get the market moving up. Okay. Now the pullback, I'll be expecting it to come right into what discounts before I look for what to look for buys. Before I look for buys, if I'm in the I'm looking for sales. I'm expecting the market to pull back into what premium before I look for what I look for sales. So right now, what am I looking for? What was I looking for? Okay. So what was I looking for? So I was either expecting the market to come down to this particular demand right here. There was a very nice and sweet demand right below that place. Yeah. So I was expecting the market to either come to this zone. Okay. Now the reason why I marked this particular zone was there is this thing that I've studied about this JPY pairs, and then mostly um, you'll be expecting them to actually trade right into the zone. But most of the time, when you use your FABE, you get to know that they trade mostly between what the zero point 0.5 and then what 0.68. Okay, so I had to use my FABE now up to this place, so I decided to use my FABE marked out. Good. So that was why I actually marked out that zone. Okay. So I used my FIB and then I was expecting the market to trade between this place. So that's basically why I marked out that zone. Okay. Yeah, because that's what I've stated about this pair. Sometimes you'll be expecting the market to make some moves straight to this place, but then it comes to this side and it goes. And then when you study the market a lot, you get to know what I am talking about. They don't always go to fill up the whole thing. They just go below 50% between what zero point 0.5 and 0.68, and then they move up. So this was how I analyzed the market. And then basically this was going to be a very nice swing trade. Stop loss was just about 49 pips. Yeah, for a swing trade, 49 pips wasn't bad depending on your account size. Okay, so since you are swinging, yeah, why not? And then what was I expecting? Or you can either wait for what confirmation before you enter a trade. So how did the market play out? How did the market play out? Did it play out well? Did it play out bad? Now, yeah, I think I also got some nice sales from this place. Yeah, I remember I caught some nice sales also from the side. Okay, so we had the market coming down. I was expecting the market to come down actually, and then on the lower time frame, I saw this very nice chalk happening. So I think I show this place like this. Yeah, yeah, I think I marked that zone. When we go to the 1 hour time frame, I think we'll see it very well. Yeah, very, very well. Good. So I had this nice chalk happening right here. So I had a break of structure to the upside. So BOS up there. And then you had this volume imbalance right here. Okay. So you had a volume imbalance right there. I had this chalk right here. Yeah. So basically I was expecting the market to trade here, get down into one of these zones before I take a buy. So let's see how it's also played out. It's also played out. Okay, so we had a tap into it twice. Okay, came down before going up. So yeah, basically you need to know how to do top down analysis. Yeah, as a trader, you really need to know how to do what top down analysis, since it's going to what guide you and what help you. Yeah, to know where the market is going to go, the next what the next move the market is going to make. Um, it also increases what accuracy in the market. Yeah, it increases your accuracy of what analysis. That's one thing I should say. Increases your accuracy of what analysis. You basically don't know where the market is going to head on next time, right? But then top down analysis helps you to what to make somewhat suggestions. Okay, no one knows where the market is going to. Yeah, to be frank with you, I don't always know where the markets will, but then I stick to my rules. What I stick to my rules and what just analyze the market the way what I normally analyze and the way it works for me, and they work for me. You get it? If I analyze the markets, you analyze five pairs. Sometimes five pairs they go for you. Sometimes you get three of them going well for you. Sometimes you get just one going for you. So it's not going to be like a holy grail breakdown or a top-down analysis. No, there's nothing like Holy Grail. I always say that. So yeah, you just need to practice. As you practice more, you get to know what works for you the best. Okay. I always say you backtest and then you know what works for you the best. All right. So thank you for watching this video once again. Now the Telegram channel, there's a free Telegram channel. If you really want to join, I just pray you guys join and see some few things we are doing right there. Okay, so this week like this, we actually gave out free trades. We actually shared every trade we took with a VIP with a free channel, and I think about 1,000 plus pips for the week from just 14 trades, right? Yeah, and you can check it out yourself in the Telegram channel. So yeah, I'll be very happy if you subscribe to the YouTube channel too. I'm opened up to any suggestions you make about the video, about the content I provide, and then if you want me to provide any content, I'll be very happy to hear from you guys. All right. Thank you for watching this video. I hope you subscribe.